Your financial future was being shaped before you even understood money, before your first loan, before your first paycheck, before your first investment. Let me show you how. Most people believe that their financial future is determined by their choices, effort, or luck. They think that if they work hard, save diligently, and manage their money responsibly, they can shape their financial destiny. But the reality is more complex. Banks and financial institutions often influence your financial future long before you realize it. From the moment you open a bank account, apply for a loan, or get a credit card, systems are in place to evaluate, categorize, and predict your financial behavior. These decisions affect access to credit, interest rates, loan approvals, and opportunities for wealth building. Credit scores, for example, are more than just a number. They summarize your past financial behavior and are used to predict future reliability. Banks rely on this score to determine how much risk you represent and how much money they're willing to lend you, or at what cost. Even small decisions early in life, like missing a payment, carrying credit card debt, or taking on student loans, can influence your options for decades. These early patterns establish a financial reputation that follows you, often quietly shaping your opportunities. Banks benefit from this system because it creates predictability. They can assess risk, determine who is most likely to repay, and set terms that maximize profit. But for the average person, these early decisions can have long-term consequences that limit financial growth. Loans, mortgages, and interest rates are assigned based on these assessments. High interest rates, lower credit limits, and stricter terms often result from early financial behavior. This affects your ability to invest, start a business, or leverage money strategically. Even small financial missteps can compound over time. Late payments, high balances, or excessive debt can influence credit history and limit future options. The system rewards responsible financial behavior early, while penalizing mistakes, sometimes harshly. Financial literacy is the key to understanding this early influence. Knowing how banks evaluate risk, calculate interest, and interpret your financial behavior allows you to act strategically. By making informed choices early, you can improve access to credit, lower borrowing costs, and open opportunities that others may miss. The wealthy understand this principle intuitively. They cultivate financial credibility early, manage risk carefully, and leverage credit to build assets rather than liabilities. They recognize that access and terms are as important as income in shaping wealth. Most people, however, are unaware of these early influences. They make decisions without understanding the long-term impact. They may carry unnecessary debt, overlook credit optimization, or miss opportunities to build financial reputation. The system is structured to reward those who understand it and to penalize those who do not. Banks predict behavior based on patterns, and those predictions can influence rates, access to loans, and even financial advice offered. Even financial products marketed as helpful, such as credit cards, small loans, or deferred payments, often tie you into long-term financial trajectories that favor the bank. The consequences of these early engagements can persist for years, quietly shaping your options and potential for growth. Strategic planning allows you to influence these early decisions in your favor. Timely payments, responsible borrowing, and understanding credit mechanics create a reputation that banks respect. This can lead to lower interest rates, higher credit limits, and better access to investment opportunities. The wealthy know that financial freedom is often about positioning yourself correctly early. They understand that early choices, compounded over time, provide leverage and open doors that others cannot access. Even small adjustments make a difference. Paying off debt consistently, avoiding unnecessary obligations, and monitoring financial reports can dramatically affect your trajectory. The dark reality is that many people unknowingly limit their financial future through early missteps. The system is designed to evaluate and categorize, often without explanation or awareness on your part. But the power to shape outcomes exists. By understanding how banks evaluate risk and make decisions, you can influence your financial trajectory proactively rather than reactively. Financial freedom, opportunity, and favorable terms are often determined before you fully understand them. Knowledge, discipline, and early action are the tools that allow you to take control. Most people remain unaware of this hidden influence until it is too late. The wealthy, however, use early insight, financial literacy, and strategy to position themselves advantageously. Your financial future is being written long before major life decisions are made. The difference lies in awareness and intentional action. By acting early, strategically, and knowledgeably, you can shift control back to yourself, ensuring that banks and institutions work in alignment with your goals rather than against them. The lesson is clear. Understanding the hidden influence of banks on your financial future empowers you to make choices that compound into long-term wealth opportunity and independence. In the next video, we'll explore the silent cost of being financially ignorant, revealing the traps most people never even see.